Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where three of us who are accountants talk about the news of business, finance, taxes, or other things, all from the perspective of us as accountants. And with me today is Tammy Hess.
Hi, everyone.
And Charlie Zigman.
Thanks for joining.
And here's what we have on deck today. A marijuana lounge in Denver. IRS is in hot water for auditing low-income more than high-income taxpayers. SPAC disclosures. Should the regulations on SPACs increase here? Pay transparency laws help negotiate salaries. And finally, the FTC sues TurboTax over their ads for free tax prep. Okay, well, thanks everyone for joining us, and we'll kick it off today with Charlie.
Okay, so we've got an article we can talk about from 9news.com called Denver Hotel Gets Conditional Approval for a Marijuana Lounge. And so what's going on is, like the article title said, basically they're adding a marijuana lounge to a place called the Patterson Inn in Capitol Hill. And this was the first business to apply for a license under the new marijuana hospitality program. The plan is that owner Chris Chiari wants to turn it into a marijuana bed and breakfast, And so what the specifics of it are is that before this year, people could consume marijuana legally outside their home, but it needed to be at a private social club that was operating on a membership basis. And they overhauled the rules in 21 to make it so that that they weren't allowed to do on-site consumption anymore. And so they added a license to that in order for that requirement to be met. And then couple of other things they had interesting in here. They said that they were going to have it be a fee that they were going to set equal to 420, and that a bunch of their target dates in terms of trying to get these open were going to be built around the number 420. There was another business called the Coffee Joint, which was currently the only licensed marijuana hospitality establishment that was actually operating in Denver. And then, under the licenses, one interesting thing is that the businesses can't actually sell marijuana, but they can allow on-site consumption of product that's bought elsewhere. And so I wanted to get you guys' opinion on whether or not you think this kind of industry is going to come to Oregon, or are we going to continue what we have now, where we just have dispensaries and then no places for actual consumption of marijuana?
Yeah, I thought this was an interesting article because I do think that I'm actually quite surprised that we haven't done it in Oregon. We've been kind of the trailblazers for a lot of the things in the cannabis industry in terms of the state. So I think that is an interesting kind of approach to have a place for people to go, similar to a bar, right? In terms of alcohol, of having a place for those that want to partake in that and have a safe environment in order to do so. So it'll be interesting to see how this goes and where it goes in the future for other states and other areas. What about you, Ty?
Yeah, I think it's a social policy issue in terms of, the way Oregon's policy has been designed is it's kind of like, well, we'll let you buy marijuana at dispensaries, but you've got to take it home and kind of do it in the privacy of it's a private, like, it's not something that should be done in the public, right? It's like, it can't be done on the street. It can't be done in a public venue. And there aren't like public places that you can get together and do it, right? It's like it all should be done like in the privacy of your home, maybe even preferably in your closet. That seems to be the attitude, right? So, I think that's what you have to overcome, right? You have to overcome that attitude. But at some point, we overcame the attitude that cannabis was so evil that it could never be legally sold in the state. So, I think overcoming this next bias is on deck. I think it probably will come at some point.
I'm hopeful. Yeah, I think it's anything that kind of allows for a safer environment for that is probably a good thing. And I think that if a state is going to have it legal, it seems like it should be legal in a thorough way, as opposed to this kind of hybrid partial system that we've got going on now. But yeah, I just found that interesting. Do you have another article we can talk about, Tammy?
I do. So the IRS continues to be under hot water. According to an article posted by Accounting Today, the IRS has been auditing low income tax filers at a higher rate. In a recent report from Syracuse University, track, it was reported that the low income workers earning less than 25,000 were being audited at a rate that was 5 times higher than others during 2021. This includes correspondent audits, which is a simple review of tax returns that are conducted by the IRS, as well as field audits that are done in the field. So people going to the people's houses and places of work. At a congressional oversight hearing, the IRS commissioner stated that the report was false. He was quoted in saying, and I quote, "I am tired of having to deal with this issue. We audit high income taxpayers more than any other category in the IRS. Taxpayers reflecting over 10 million of income are audited at a rate exceeding 7%, and taxpayers at the 25,000 level, which is primarily the earned income tax credit taxpayer, would be the only people that we would look at, and they are audited at 1.1%. So Track believes, however, that the IRS is omitting certain data from those figures and have asked them to reinstate them using the current statistics. The Professional Managers Association, which is a group that is representing the IRS, indicates that due to limited resources, the IRS has focused on the simplest tax returns to actually audit. So those tend to be those of lower wage earners. And I think that this is a really ongoing story. There's a lot of back and forth of who's right and whose claims or statistics people should be using. But I wanted to get your initial thought on this matter.
Yeah, I mean, I think that this is a really interesting and important topic. And I think that it's just easier for the IRS to audit those who don't have the defense mechanisms that some others might. One example would be tax attorneys, the availability of the client to use that whole system and that whole industry is something that a lot of smaller taxpayers don't have access to and don't even think about. And so it just becomes easier for the IRS to focus on those that don't have those defense in place. And so I don't think that's the way that it should be, but I think that's the way that it would often end up in practicality. I think it's mostly aimed at middle class because once you go too low, you don't, there's not enough tax revenues to kind of be chasing for that to make any sense. But I think this problem specifically applies to kind of people that are really in the middle class. And so, yeah, I think that there should be something in place I think that should be a controlled thing that, that there isn't audit more heavily at any given income bracket than anything else. Yeah, those are my thoughts on it. What do you think, Ty?
Yeah, I think that is all 100% the case. Lower income tax returns are easier to audit than higher income tax returns. And so with limited resources, if the data is proving out that that's where they're focusing or that's where they're doing more work, the IRS that is, that's not surprising. I think, one thing I would point out is, and I've heard this topic discussed other places as well, and exactly what the way Charlie said it is true, that one of the hurdles that makes a higher income tax return harder to audit is the kind of defense and professional resources that the higher income tax return or taxpayer may have at their disposal. But I also think there's more like, if you set aside professional help or non-professional help, the nature of the issues lend themselves to being just more complicated in a higher income tax return, because in these lower income tax returns, as they described with earned income credits and child tax credits and things like that, the issues are pretty mechanical. And so it's either like there's an mechanical error that is being found through the audit, or there's fraud in which the data inputs were just flat out put in there wrong, and there's no interpretation question there, right? But when you get into higher income tax returns, a lot of issues, particularly whether it's business or high income, high net worth individual tax returns, a lot of the tax issues revolve around questions of valuation, or which can be a subjective matter, questions of allocation of expenses between various categories, which could be the matter of different possible accounting methodologies. It could be questions of dealing with foreign tax jurisdictions and how the interplay of a foreign tax jurisdiction interplays with the U.S. tax generation. And these things are questions where the actual tax law itself may be a little bit gray, and there may be the taxpayer may and their lawyers and people may be interpreting it in a way that is beneficial to the taxpayer. And if the IRS wanted to challenge it, they could interpret it in favor of the government and of us as collectively as taxpayers. But that would require more kind of professional resources on the IRS side to have that battle. But I think I just wanted to make that point, that it's not as simple as, low income taxpayers don't have lawyers to defend them and higher income taxpayers do. It's also even if a low income taxpayer had the best lawyers in the world, the issues don't necessarily even lend themselves to that kind of defense anyway, because there are not as many interpretive issues at the lower income tax brackets. So that's my 2 cents on it.
Yeah, I agree with both of you guys. And I was kind of, thinking about this too, where the IRS is hiring a whole bunch of folks to come in and help with the tax returns, as well as doing, more in terms of the audit size. And I think when you start off at new with any type of organization or maybe position or entity, they are probably doing the ones that are more easier in terms of mechanical calculation errors or just data input errors or things of that nature, that those are probably easier to train on or focus on in general. But it would be interesting to see if anything does change out of this, if the IRS is kind of encouraged or directed to kind of split their resources and still obviously do the correspondence or the simple audit kind of things, as well as then devoting some time and resources and auditing on a sample basis or whatever, some of the other ones as well, to help kind of change the perception that's giving. Because I think right now, this article coming in at the 1st of April, and we're 2 weeks away from the tax deadline, this is not helping the IRS in terms of its efforts of trying to kind of correct their perception in people's minds. But we'll see. If more comes on this, we'll keep you updated. So I think, Ty, you have our next article.
Yeah, I'm pulled a topic that I saw in the Wall Street Journal about the SEC pushing for more disclosures from SPACs, or making more required SPAC disclosures. So SPAC is a hot term in the finance community for a while now, which means a special purpose acquisition company. And these are also sometimes referred to as blank check companies, which mean, and they were designed, essentially, they were, on the face of them, they were kind of designed to get around the regulatory and disclosure hurdles that you might go through in a normal IPO process. And which has also been kind of in the zeitgeist of finance discussion, and also it's been a political discussion. And in the IPO process, in that regard, the discussion has been, well, are we making it too difficult? Do we have too much of a regulatory environment and too many disclosure requirements, making it too difficult for companies to become public companies, to do initial public offerings? So you've got that debate going on. And then on the side of it, the SPAC has basically been used as an end run around that, because the way special purpose acquisition companies are designed is that investors invest in these, they're private entities, they invest in these entities, and these entities do not have to provide the same kind of disclosures that you would if you were trying to invest in an entity that was either going through an IPO or was a public company. And then that SPAC company can basically, the management of the SPAC can invest in whatever they want with the cash that comes in, and that's why it's often referred to as a blank check company. And so, on one side, the SEC is saying, well, we think that we think that the time has come that we require SPACs to provide more disclosure because they're being used so widely. There was a very large percentage of the companies that went public that did so through a SPAC structure in the last year. And so the SEC is saying, these are being used so widely that we think that it's in the public interest that we require more disclosure. So it's more commensurate with the kind of disclosure and regulation that you otherwise would have to go through if you were just doing a regular IPO of taking your company to being a public company. And then on the other hand, you've got kind of the opponents to this, which are actually in Congress. So this is a political matter as well. The opponents are saying, well, first off, we oppose increasing regulation in this way on SPACs, and secondarily, you wouldn't even have to, SEC, we wouldn't even have to do this if, as a matter of policy, or this wouldn't even be a problem for you as a matter of policy if the regulations on regular IPOs weren't so strenuous to begin with. So they're basically saying, not only do we not want you to increase regulation on SPACs, but we want you to decrease the regulation on IPOs so that, to this point that, why should SPACs even exist? The need for SPACs or the existence of SPACs would be greatly reduced if the regulatory environment for IPOs was opened up a bit. So that's kind of in a nutshell the conversation that's happening. And yeah, throw it out to you all what you think about those points.
Yeah, it definitely seems like there should be a similar level of reporting requirements for industries. If you're getting into something that another company would be required to report had they not been set up as a special purpose entity, it just seems like ultimately the goal is to be able to report on all the information that's available. And so I don't see why there should be any kind of carve out for these special purpose acquisition companies. And I think that does make sense in terms of kind of meeting in the middle on the regulation and having an answer that applies, equally to both companies that are formed directly for the purpose of what they're doing and also ones of these blank check companies that you're referring to. So yeah, I think it'll be interesting. What do you think, Tammy?
I like what you said, Charlie, in terms of meeting in the middle, because I think that there are some times where it seems like we continuously add disclosures, like Ty said in the opening of it, keep on adding disclosures to, saying that there is a benefit to it, there's a need for it, and we should always do that. And then when other companies can't do it, then they're like, okay, we'll create something special that could utilize it, so they don't have to do that much disclosure or reporting requirements. And then, well, now they're getting so big, so yes, let's go ahead and do that. And then instead of being like, just what I think would be great if we can kind of all take a step back and review of like what is needed, what information should be provided, what will be helpful in terms of addressing the concerns or the needs for these offerings, regardless, whether it be an IPO, whether it be the SPAC companies and things of that nature, because I think there is some need for obviously reporting and regulation, but every time the pendulum moves from one end to the extreme to the other, I think we lose things in the middle that then it becomes even more problematic and not helpful and not really solving what the issue that was raised or, in terms of what this was trying to combat. It's actually doing the opposite. And if this were to be the case, then they're going to say like, oh, let's, create another type of organization type of special filing requirements of this, that, or that nature. And then it will keep on just going more and more and more until it kind of collapses on itself, in my opinion. But I might be thinking too simplistic here, but that's kind of where my head went to.
Yeah, I think that's right. And I think, I guess what I'll say that's controversial, and a lot of people in the finance community will just say I'm just utterly wrong for this point. But I mean, from my perspective, it's like, well, if you are operating a business or starting a business, and presumably you're probably already operating a business in this zone, and you're basically like, we need capital, and you're looking at your options, and you're basically like, nah, I'm not going to go raise from institutional investors. Nah, I'm not going to go raise from private equity firms. No, I'm not going to go raise from VCs. I'm not going to raise from friends and family. I need to get my capital from the general public, right? Like, I mean, when you think about that whole kind of concept is kind of suspicious, right? Like, why is it that, now maybe you can make the argument that getting your capital from the general public maybe comes with a lower cost of capital or whatever. But yeah, it's like, all of the places where you typically would get capital for your startup enterprise, where the capital providers have the expertise and the sophistication and the ability to evaluate their investments, or at least know what they're getting into, you're basically crossing those off the list and saying, I want to get my money from the general public. I mean, sounds very egalitarian or sounds very suspicious. I mean, so yeah.
Well, and I think because it sounds suspicious is why then people want to automatically jump in and make sure you have all the proper disclosures, because you're going to the public, which are going to be a little bit more sensitive in terms of what you can or cannot do or how you're using their money. So it's like this weird kind of situation of what everyone's kind of getting into. So if I agree with you, Ty. I think it is definitely more suspicious, but then would lead me to say more requirements and disclosures, please. So before I start to invest publicly, but what an interesting kind of debate that's going on there.
Well, and just kind of branching out on that topic, not to mention that there's Kickstarter and there's all these other things, which I realize is different. But the point is, if your real goal is to get funding by the public, there was an avenue in place that's supposed to be the answer for that whole approach. And anybody who's looking into these SPACs has decided also that that is not the approach they want to take, which might make sense for its own reasons. But yeah, it's just for having so many options available, this seems like asking for trouble kind of a thing. So, but I've got another article we can talk about that's a little bit different from NewYorkPost.com called New Pay Transparency Laws Can Help in Salary Negotiations. And so what they're doing here is that as of this May, they're going to set it up so that in New York City, anybody who's posting these job requirements or anybody who's posting job listings and has more than 4 employees has to post a bottom end of the salary range and a top end of the salary range. And then, of course, the idea is to try to help make these negotiation talks for job applicants go a little bit more transparent and straightforward. And the article talks about how the idea is that if we can get the ranges posted, then it can make the interview process be more of a discussion of where do I fit within that range. And so the article looks at a couple of different experts on the topic. It talked to Terry Wine, who's the co-CEO of the global career advisory firm Weil & Wine, and they give us some advice to potential job seekers who are in the process of negotiations currently. And so her advice was to pay attention to what the responsibilities are, to know that pay scales can tip. So even if there is some posted range, perhaps that's actually subject to negotiation as well. It said to look at the big picture, which is just kind of general, but step back and see where you fit in the overall scheme of that role and of that industry. Also, one good piece of advice I thought they gave was if you see your current job posted for more than you make, that becomes a tool for you to then negotiate. And then one that I've personally struggled with in my life was that your best recourse might be to walk. Sometimes when you're looking at kind of negotiations, you have to decide, basically you have to come to the table ready to leave the table if you're really going to negotiate well. And so I just, I thought this was interesting kind of topic for discussion. And I wanted to see if either of you had any advice for people who are in the job market working on negotiations currently.
Yeah, I thought this was interesting because I do think that the conversation about posting like kind of the salary range for a particular position, even like internally or in terms of when you're posting it for external applications, has always been kind of like a hot topic, which I find really interesting because I think that in the long run, it saves time and effort, especially if you're paying to market or you're paying for what that job entails. Because a lot of times what that will do is people who are looking at it could say, hey, like if it's in, if I'm way outside, my expectations are way outside the range, why would I waste my time in applying? Maybe I don't want to do that. Or maybe I should at least start my application and saying, hey, I'm really interested in it. I think I can fit. However, it looks like I'd be outside your range, and start that conversation early before you're wasting anybody's time, both the person who's applying for the job as well as the people who are in the hiring position trying to evaluate resumes, because sometimes you get resumes that are never, you don't want to waste the time to have the conversation after the fact of getting them through all the interviews and all the stuff to say, oh, we can't agree on a salary. And I think the other thing too is it is important to know what it is that you're kind of applying for, what you're working for in terms of the range. And that if you are, within the low end or the high end of the range, that you understand why. And so it's usually based off of your experience, your skill set. All those different things can make you go up or down the range. And so to your point, Charlie, if you find yourself that, hey, I see this position and I think that my position that I'm doing in the market or in within the same company has a different range than when I'm in, let's have that conversation. Because what can tend to happen, or what people can feel like can happen, is that you're only paying top dollar for new people who are coming in, and you're not giving the right market adjustments or salary increases for the people who are maybe homegrown in that company. And that's not a great feeling to be in. And that shouldn't be what causes a conversation about your salary or your performance, is by the fact that you see that your range should be higher based off of any type of kind of consideration. But one of the things I would also add to it before I could go over to Ty is that I would encourage people to have those conversations in terms of, if you do have questions about your salary or about your ranges, or those, if you're applying for jobs and you have questions about their what they're posting, if they did post it or did not post it, have those conversations versus not having them and making assumptions and walking away, because you don't know what you don't know. And I think it's a fair game for both sides to have an open and transparent conversation. What do you think, Ty?
Yeah, I actually think this is great for small businesses as well, because from my perspective, I want to, as a small business, we want to pay market rates to the people that are working with us. And that is a hard thing, is to know what that is, right? And then if you get into any kind of negotiation, either when you're hiring somebody or with an existing team member about pay, and if the conversation comes down to we both agree that they should be paid market rate, but my view of market rate as an employer is different than their view of market rate as an employee, having some objective data that's actually available out there and regulated on what that is really simplifies the conversation. And so I think from the other side, as an employer, I think it's great that my conversation can be simplified to whether I think the person is qualified and eligible for the job that fits the rate they're trying to get, as opposed to whether that job should pay more or less, right? I think if we can take that variable out of the equation and we can just talk about the skills that person has or doesn't have and how that qualifies them for that job from the employer standpoint, I think I actually like that. Now, I know other entrepreneurs and other business owners don't agree with me on this, because, I think, some of the things that I've heard people say are things like, well, some of the things I'll hear people say will be like, well, we have such a great culture and work environment, and the switching costs once somebody is working for our company is so high for them to leave and go work somewhere else, that we accrue a benefit from that, which means that we essentially do get to pay less than market. I just don't believe in that. So I think, for those employers that's how they roll, okay, but I think I don't, I feel like I can construct a business model and formula that assumes I'm going to pay market rate, and that my profits are above and beyond paying the people on the team market, that I'm figuring out how to make profit above and beyond that. That's how I think I look at it. And then the other one that I sometimes hear is, some people think market is relative to, so they'll, and maybe that would be true, that maybe that would bear out in this kind of data that would come out, is, although I'm skeptical of this as well, but the idea that, well, for the same exact job doing the same role, if you're working for a smaller business, it pays less than if you're working for a larger business. It's like, well, if it's truly the same job, I don't know why that would be. It's, so I think if it's not the same job, then maybe not. But I always ask, we hear that a lot, like in the accounting industry, that's very common, of small accounting firms to say, well, we're smaller accounting firms, our fees with our clients are less, therefore, we should be, our talent pool should expect to get paid less than if they work for a larger accounting firm. And, it's kind of like, well, you want to get the best talent you can get coming out of school or coming out of the market, don't you? I mean, I don't know why you think you can just pay less, because you chose as a business to serve, clients that maybe have lower fee structures. That doesn't, if you want this access to the same talent pool as a larger firm has, you have to pay the same market rates, in my view. So yeah, I don't I think all of those ways of thinking are problematic, but I also know that I'm not necessarily I'm not indicative of the entire entrepreneurial business owner thought process out there.
I think some of the things that you say, Ty, kind of reminds me of back in the day when I was coming out of college and looking at the various different offers from, especially the public accounting firms, which typically they're hiring you. You have just your college degree. You may have enough to sit for your exam, but you really don't have experience, and so it's pretty similar. And you're right; a lot of it's going to be based off of the size of the CPA firm, or a lot of times what this really kind of what I wanted to kind of touch on was they'll say, well, the benefit package is different. So you have to, like, we give, 5 weeks of PTO versus the 2 week at the other place, or you have, free parking, free lunches, like various different things. And I would say to anyone who's looking at that, when you're looking at your salary and you're going into negotiations, one of the things is to think about that does play a factor. However, one of those questions I would have is how often are people taking their vacations? Are they taking the 5 weeks? Are they taking, yes, you offer it, but you actually only in real life terms only get 1 week? Or if these things matter to you in terms of when you're looking at your compensation package, I think look at overall, not just with salary, but then also ask those questions and really make sure that you understand of what you're asking for and what they're providing and what it does include and what it doesn't include. Because I think it is one of those big kind of steps when you're looking at taking when you're having the opportunity to choose between different job kind of postings or options.
Yeah, I think that's true. And another interesting thought I wanted to add here is that this is one of those interesting things where you have a law that is doing something that a website is also trying to do in the background, because there's this Fishbowl is one that I've heard of. I know Salary.com has some people who are trying to do this similar kind of a thing. And then you always had, people talking around the water cooler about what they make and whatnot. And so it's just kind of interesting to see how that becomes, formed into an actual law and whatnot. But I think, yeah, business owners still have this challenge, whether the law happens or not. The idea that employees would then talk about their salary and whatnot is a issue for them regardless.
Yeah. And I think to that point, Charlie, talking, because I know that was another kind of challenge when people do talk about their salary, especially in comparison to other folks. I think it is always kind of the context can be sometimes missing. Because so if I'm sitting there talking to my buddy Ty, who I think is my same, level of expertise or whatever, and we're comparing salaries, it's interesting, right? Because what if I'm on a performance plan and I don't have the skill set, but yes, he's considered to be, and also with all these other type of accolades and all this different type of stuff. And it's like, we're not comparing apples to apples. So it is one of those things where I always find that kind of interesting, because I know that has happened in teams I've seen in the past where people are talking about their salaries collectively or against each other. And it's like, well, you're also not providing the full scope of things or talking about it in full context as well. So it is interesting, and then I think but what I would say to that, then it's bearing the question of like, oh, if I feel like I am not being paid, in my peer or against my peers or out in the public, have that conversation. Let's figure out where that goes. And I think having a range, to kind of circle back to the article, but having that range does help you, because then you're really kind of figuring out if this is a true range for my position, where am I falling? Because there could be reasons why I'm in the middle, I'm right on, or I'm being paid above that, those types of things, to kind of have those discussions. So.
No, good points. Good points. I think you have one more article we can talk about. Is that right?
I do. So keeping in line with the tax discussions, I have an article from Yahoo Money on the recent lawsuit filed against TurboTax. Earlier this week, the FTC filed a lawsuit claiming that TurboTax ads regarding its free tax filing services are misleading. The FTC is quoted in saying TurboTax is bombarding customers with ads for free tax filing services and then hitting them with charges once it's time to file, which could be considered a bait and switch tactic. According to the FTC, only 1/3 of tax filers were able to use the TurboTax free service in 2020. So Intuit, who actually is the parent company of TurboTax, they claim that there was no wrongdoings on their part. In fact, they have been quoted in saying that our free advertising campaigns have led to more Americans filing their taxes for free than ever before, and have been central in raising their awareness of tax-free prep. free tax prep. There we go. They claim to have helped nearly 100 million Americans file their taxes for free over the past 8 years. So, of course, I did some looking, and based on Turbo's tax website, filing for free can occur if you have a simple tax return. So only using the Form 1040. Essentially, it's those with just a W-2, limited interest and dividend income, claiming a standard deduction, or earned income tax credit, child credits, or student loan and interest deductions. Anything outside that box, like such as having an itemized deduction, unemployment income, business income, stock sales, rental property income, or credits, deductions, or other types of incomes will not qualify. I even did some further investigation and watched some of those historical TurboTax commercials to see what I thought about them. And of course, they do focus on the word free. I think there's one that was like, they said free over 50 times in the 2-minute ad. But at the very end, it does say, see the details on turbotax.com. And then if you go on the website, on fine print, it does say that only simple returns are free. So which claim do you tend to agree with? Is it really misleading, or should consumers be responsible for reading the fine print?
I think it's misleading, but they've covered themselves adequately. So I don't think it's illegal. I think that it's not in their, truthfully, it's not in the spirit of TurboTax to want to provide free returns. If they're doing it as a concession to the fact that they should. But, let's be real, they're a business trying to sell the act of preparing tax returns. They would prefer that you use their paid products. They're going to say what they need to say to get you to tune in and to use the site, which is, like you said, the word free about 600 times in a commercial. But, to be honest, I used TurboTax this year and I paid money, and nowhere in there was there really a great option in terms of making it free. And so I don't think that they're overly genuine in their claims for being free. And I certainly don't think it's in proportion to how many times they say it in the commercial, because they definitely say it more than it happens. What do you think, Ty?
Yeah, I mean, I think, well, the freemium model for apps and software is a thing, right? Where, it's whether it's taxes or other things, where you provide some kind of base labor or service, and you get people using the app, using the software, they become fans, or they become part of they locked into the user experience, and then you start kind of, they have to pay in order to get the best features, or to stop ads showing up in their face, or whatever those things are. And so I think what strikes me as particularly egregious about this in comparison to that is that it's more binary, in the sense that it's not really possible. Like, if you have a tax return if you have a life that has certain things in it, there's no way you can use the free portion of the tax return software, right? I mean, once you hit the trigger of needing the paid version, then you need the paid version. So unlike a freemium app where you can just restrict yourself to the limited features, a taxpayer can't really restrict themselves to the limited features of the free version of TurboTax, right? They have to report what they actually have going on in their life. And so I think that aspect of it, I think Intuit probably hasn't, they didn't address it in a reasonable way, right? Because I think, if I were on their team, I would be arguing, well, this is what we do in the software space. We provide free versions, and then we provide add-on features and other things for charge. But it's that difference. It's the fact that a user cannot possibly use the free version. I mean, such a large chunk of the people who get brought in to use the free software cannot actually use the free software, and have to end up paying for the premium version. And that's not typical. That's not what's normal in the freemium model of other apps.
Yeah, and I guess what will be interesting to see if at the end of the day, if TurboTax will just kind of change their kind of their ad campaigns into saying like, hey, by the way, it is free for those that blah blah blah. Kind of just be upfront about it in their ads, or just a little bit more transparency, rather than actually going to the website and having to read the fine print before you actually get there. I didn't go in my research and my investigative research that I didn't go in to see like, could I start to do it without, and then at what point would it kick me off saying, hey, by the way, you're not going to get it for free? Because I think that was the premise of what the FTC was saying, was that the users actually go onto it, seeing that kind of ignoring any of the fine print and start doing their tax preparation. And to Ty's point, when they're midway through and they're like, oh, well, in order to complete your tax return, you have to now pay. That would be, I think, misleading and obviously frustrating for those people who are going down that path. So we'll see if it will change or if FTC is successful in the claim that they just filed. But I will keep you guys posted as I learn more.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for tuning in and for listening. We'll be back again next week with more business updates from an accountant's perspective. Please also check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. Thanks a lot, everybody. Bye.
Bye.